According to Trump, everyone should be able to buy a house.
Yeah. Well, as you guys may or may not know, every single president has affordable housing in their radar, right? Like
Yep.
a lot of times people just don't see it. It's not that apparent. There are a lot of things over the years, starting back, the big one was FDR, and I know most of you probably weren't alive, but from 33 to 45, he established the FHA, which a
Hmm.
lot of people know about today, right? And that was to ensure long-term low-interest mortgages, and obviously that program was a huge hit. And the list goes on and on. But let's talk about Trump right now,
Well,
because
first, let's talk about Bush. Because the last time that we had a president really focus on everybody should buy a house was back in, what was that? Oh, two probably.
well, yeah, it was. So there was the Clinton and Bush era. They pushed the home ownership, right? And then it kind of popped under Obama. That's essentially what happened. So Obama kind of got the brunt of, I would call the 2007, 2008, great financial crisis.
Yeah,
Yeah.
housing crisis.
But it was started really two administrations before that. And I just, if you take a look at these presidents, even Kennedy started HUD and a lot of, housing of urban development. And we do a lot of HUD deals.
Hmm.
So we do what's called the 221D4 program with apartments, and they have a lot of HUD programs for affordable housing. He also established fair housing. And this is important because you remember what was going on in the 60s.
Hmm.
So that was the fair housing, which is awesome, right? But then you keep going, whether it's Ford, Reagan, Bush, even Clinton, expanded the Fannie Mae, Freddie Mac programs. So, and then in Trump's administration in 2016, remember, he did the opportunity zones. So it's going to be really interesting to see because he's a real estate guy. He's going to be out of office in what, 3 years probably. So, and well, if he wants, right? But the interesting thing is he could come up with something really powerful. And what we have right now in this country is an affordable housing problem.
Well, but I don't know if this is a partisan issue either. I mean, I know Trump kind of does what he wants to do, but this could gain a lot of support. Some of these ideas he has for Democrats and Republicans on both sides of the aisle, because there's a lot of pressure on these candidates about being able to afford a home, right? They're people that vote want to be able to afford a home. And as we all know, homes are unaffordable. And this whole thing of home values are just going to crash down isn't happening because, as we talk about, people are sitting in 3 to 4% mortgages, right? And so they're not stressed. So the people that want the values of the homes to go down are the people that don't own homes. People that own homes, they don't want their house value to go down, and they also can afford their payment, so they're not under financial stress to have to sell. So you have this, market that's totally frozen because even boomers don't want to sell because they have to then pay capital gains in some situations, and in other situations they have to move into something that's smaller that's going to be almost as expensive, right? So then they're not selling, and then you have families like my brothers that need to expand into a bigger house, but they have a very low mortgage, and to expand into a bigger house would be a huge jump in monthly cost. So you have that happening all over the place. And then you have people that don't have a house yet that really want to buy one that are waiting for prices to come down. And it's just looking like that isn't going to happen. I mean, we're already seeing some softening of the rates. These interest rates have been high for a while now, and there really hasn't been much price movement in most markets.
Right. And we keep talking about this exact issue, right? There is not going to be a single family housing crash,
Mhm.
right? Now, there is a bit of a crash going on the commercial sector, but the public doesn't even really know about it.
Yeah,
Right?
it's
Right?
totally separate. And it's separate because those loans are not fixed.
Right.
They went up when the rates went up. Nobody's like sitting in, 3% fixed rate debt on the
Yeah.
multifamily.
And they don't care. Like a renter doesn't care.
Mm-mm.
Like, right?
Yep.
Like if they live in an apartment building and the ownership is going to hell and there's, all of a sudden it goes back to the bank and then goes back to somebody else, The only thing that might change is maybe the management company, right?
Well, and also like deferred maintenance, so they might get annoyed because things aren't getting fixed. So they'll notice that.
They could,
Yeah.
but the lenders, they've got these safeguards in place for a lot of that stuff.
Hmm.
So a lot of times a lender will take back a property and then put new capital into it, right?
Hmm.
To preserve the asset, and you have to do it to get it marketable anyway. So, so there's this like silent crash going on in call it the apartment and some commercial office and some retail. Not everywhere, of course, but on the single family side, the people can't even hardly notice, right? Like it might show up, however, in your life statement, your pension fund statement, or something like that, if you guys even know that you're invested in some of those things. But the single family market is not going down anytime soon. Now there are markets like Florida. Let's just pick on Florida a little bit. There are markets where there's a lot of listings hitting right now, and we are seeing some pricing changes. But historically, we're not even close to what the amount of listings are in the U.S. And I want to remind everybody, during the Great Financial Crisis, there was something like 10 million homes for sale.
Right.
10 million. And what are we at? Less than 2 right now?
Well, I mean, I'm even working with clients in the Phoenix market, and it's like we just bid a full price offer with an escalation clause a couple of weeks ago. We didn't get it because there was multiple offers above asking. And then they were interested in another house the other day, and we didn't go see it that day, and it sold, right?
Yeah.
So that's not a 2008 situation, right?
No, that's a seller's market. But that happens to be Phoenix at the moment.
It does, but it's just, but if you read online, the Phoenix market is crashing. There's 20% discounts. What I am seeing is that, things that are overpriced are having to come down, 10%, 20% because they overpriced it. But it's not because prices are just down that much.
Let's like draw a line to why we think this is important.
Mhm.
We think it's important because if the only way affordable housing is going to neutralize for everyone is for single family home prices to actually go down dramatically, which we do not believe will happen, and or interest rates to go down dramatically, which could happen, but that's not going to happen for some time, easily a year plus out. So what we have right now is we have a situation where people can't afford to buy a new home, the entry level home. And Trump has this window of a year, maybe a year and a half, to do something to try to get it going. Because anything that's passed is going to take time. And then, of course, in order for it to go out into the marketplace is going to take time. And then to actually see the results is going to take time. So what we have right now is we have this window of time where the homeowner, or the traditional homeowner, like my two boys, who are in their 20s, who absolutely positively can, they have to have 100 grand in the bank to be able to buy something, right? Plus they have to have really, really a good income and all that stuff, just like anyone else. They're sitting in rentals.
Yeah, and I think that, Trump has this window and he has a bunch of ideas, and the question will be what ideas are adopted, which ones are not. But I can almost guarantee you some of these are going to be adopted because, like I said, it's not a partisan issue. People want affordable housing on both sides of the aisle.
So let's go over your list, because I love this list of things that Trump wants to do. Now, granted, some of these may or may not happen, but it's on everyone's mind.
Yeah, so the first one obviously is for the Fed to lower rates. And we've been seeing this, with everything that Trump has been doing. He is trying very hard to get Powell to lower rates. He's trying very hard to get Lisa Cook off the board so that he can put somebody else in there that's more prone to his ideas of wanting to lower rates. So, and the Fed has even changed their position when they meet this month as to possibly starting to lower rates. So we're already seeing that, and we think that that's going to escalate more.
But there's a big wild card here.
Mm-hmm.
No matter what's being reported for inflation, it's the unemployment issue. Yeah. Right? Like that is something that could really throw a wrench into Trump's scenario here, because we all know people that are getting replaced by AI. I'm talking about low income, low entry level, mostly white collar positions, So, think of HR, think of, paralegals, think of, marketing, graphics and content writing and all that stuff. Those jobs are being replaced right now as we speak, and we're at the very beginning of this. So I think this could be something that could really throw a wrench into that the Fed decision of really getting those rates down.
Yeah, absolutely. And lower rates, they don't just help people wanting to buy a home. They help small businesses to start. They help people with credit card debt, car loans, all the things, right? So this is something that we think as we move into the end of 2025, early 2026, we will see rates start to go down. Now, people do talk about, okay, just because rates go down, the bond market, maybe the long-term rate won't go down, right? So it won't help housing. But so far, we haven't really seen that too much, right? Like rates have went down on the talks of Trump going to be lower, or I'm sorry, the Fed going to be lowering rates, right? We've already seen that quarter point drop in the housing market from the 30-year.
And the reality is the other side of it, and Danille touched on this, is if rates do go down, then what happens is you actually have another bubble potentially. Again, it takes a while.
It's not immediate.
Yeah, it takes a while, but the reality is lower rates definitely spur the economy, which is good for the economy, but it also creates bubbles in lots of areas, from auto loans to electronics to obviously housing, HELOCs, cash out refis, new homes. All that stuff is good, even on the commercial side, even though most of that is driven by, I would call it the 10-year, which is sitting around about 4.2. It's been that way for a while. And that the projection for that, believe it or not, is not that much to go down. So that's an interesting thing too, as that plays out.
Yeah. So something else that Trump is promoting right now is a new credit score system.
I like this, by the way. The old one sucks.
Yeah, the old one does suck. And there's a lot of issues with the old credit score system. Certain states have tried to just do away with credit scores altogether, which is a terrible idea because then, we've seen, certain cities in Washington do that, in California. And the issue with that is that then a renter's got to qualify on how much money is in their savings account. And, the landlord wants all these additional protections that a lot of renters just don't have because they can't pull a credit score. However, a credit score, if you have a bad medical debt that you're trying to pay off but can't, there's all these things that can plummet your score that, are a little bit out of your control, right? Just because a renter, a potential renter has bad credit because they had a huge medical, issue and they're trying to pay off their medical debt, but it's too much, doesn't mean they're going to be a bad tenant.
Well, let's talk about why the current system sucks, really, because there's a few reasons that I don't want to skim over. One is, if you're retired, so we have a bunch of senior projects, and some of these senior projects, of course, most people are working toward retirement. So if you don't have a W-2 coming in, like the system doesn't know what to do with you. Like, you know what I mean? So you could be financially retired, have a fair amount of money in all these different accounts, and you cannot believe how many hoops you have to jump through. Another one is just the self-employed, right? They don't like that either. Like Danille had a ton of problems with this. If you guys can believe this, I have a problem with this. So I don't take a paycheck out of my company, as an example. I live off of my passive income and our property stuff that we do. I talk a lot about this. But because of that, the bank has a tough time wrapping their head around the fact that I don't have that little paycheck coming in each and every month, right? So you had that for your refi. Remember, your mortgage person asked you to go and go get a job, right? In the middle of
when I was buying my first condo, he's like, I can't rent or I can't loan to you, but if you go get a job for 6 months, this will be no problem.
And by the way, at the time, she had almost the entire amount of for the price of the condo in cash.
Yeah, I had 140 grand on a $160,000 condo.
And the guy told her to go get a job. Yeah. So okay, so these are obvious. Some of you guys may or may not know that this happens. So everything's based on this weird credit score with kind of these old rules. And then Danille touched on it. If you guys have, let's say somebody has the medical problem. I know she discussed this. But that, one medical bill, you might have great credit for 20 years, and then you had this thing that's not covered by health insurance, and you're working with the hospital, let's say, to try to work through these bills, your credit score drops out a lot. And all of a sudden, what happens is you now have to pay a higher interest rate. Like the whole system's against you for this one thing. And we see this a lot as people try to rent. There's some very, very, very good people out there that have these one-time events that, are crushing them. And so all of a sudden it puts them at such a disadvantage in every way. So the credit score proposal that Trump's got, I think, is needed.
And there's one other thing too. In order to establish credit under the current system, you basically have to go take on debt, right? You have to either go get a car loan, you have to go get a credit card. And a lot of people, they say, well, just use it for groceries and pay it every month. Well, it's a little bit of a trap because a lot of people, when they get that credit card, they want to use it, right? So you're trying to get an 18-year-old a credit card just so they can build credit.
Do you guys remember that? I remember that. Like my mom and dad said, hey, you got to get a credit card to build credit. How ridiculous is that? Like you need to go out and get in debt to be able to show that you can pay off debt. Now, I do understand the other side of that argument, but you're right. Like this whole system is set up to get you in debt.
Right. And so what Trump wants to do it's called the Vantage Score 4.0, and this is kind of what he wants to do, but he wants to help people qualify for these mortgages because this does happen. Like I had a client a couple months ago. He has no credit. He wants to buy a house. He doesn't have bad credit. He just doesn't have any credit cards, fiscally responsible, but he didn't have enough credit to qualify for a loan.
But he has cash.
But he has some cash. But I had to have him go open a credit card at like 30 years old to try to start building credit so that he can then, be able to buy a home. So this new credit score system, it's going to look at tenants, like, are you paying your rent on time? Are you paying your utilities on time? It's going to calculate in these normal bills that normal people have without taking on debt.
Right. And that's what we need, guys. Yeah. We need a system that shows what people are doing right. Mm-hmm. And also cash. Like there's like this whole system is set up. It's so bizarre the fact that two people sitting here doing this podcast right now have a heck of a time just getting loans. Mm-hmm. Like, right? Yeah. It's unbelievable because we don't fit in the little box of having a paycheck. So that's a big one. Stay tuned on that.
Well, plus too, if a tenant has been paying rent, say they've been paying rent for 5 years, the landlord has said they've paid rent every single month on time, then, there's a good indication that if they got a mortgage, they would do the same thing with that. So the next thing that Trump wants to do, and this one is pretty controversial, but he wants to allow people to use crypto for qualifying for real estate. So essentially, there's all these people that made a bunch of money on crypto over the last few years. They don't want to take it out and put it in cash. They want to keep it in crypto. So this one, I don't know if this one would pass, but what he's trying to do is be able to use that crypto as collateral against a home, just like you would a normal asset.
This is a risky one, though. I mean, we were just talking about this the other day. Like, there's a whole bunch of people in crypto that have their money sitting in their little,
wallet,
their cold wallets and, on these little thumb drives, and nobody knows that they have it. They don't know how much they have it, and they're obviously trying to avoid tax. Mm-hmm. So there's all these nuances around this. But it does appear that Trump is a Bitcoin crypto president, right?
Yeah,
got to embrace it. So this is one to watch. It's going to be very, very interesting. And this actually could help the housing market a lot.
It could, because there are a lot of people in crypto that would like to move that money to diversify those assets.
Yeah. I mean, think of this, guys. There's lots of people that have crypto on the sidelines, on their little thumb drives, that could buy a house all cash. A lot of people. And so this is something just to keep your eye on.
So number 4 is being able to use your 401k for real estate investments and private deals.
So this one's always pissed me off. So this is what we have in the U.S. is we have a system set up for retirement and 401k, and you guys have heard all these before. And so you could put money away through your employer, and there's employer matching and all that kind of stuff. Even the ones that don't have employer matching, they sit over here. It's your money, by the way, sitting in your retirement account, okay? We're one of the only countries that actually says you can't use that for yourself.
Mm-hmm.
You actually like now you go to Australia, which is called I actually can't remember off the top of my head. In Canada, it's called the RSP, the Retirement Savings Plan. They let you use your money to do what you want with you. You know, you can, but you can't in the US. You can invest it, by the way, but you can't live in it, right? There's these restrictions on the other side. And so this is a big one because they're basically cutting people off. And you know why they do it? Because they want you to invest in their financial products with their wealth managers in their system. So this is a big one because there's a fair amount of money sitting on the sidelines in the retirement plans. And I, for one, would love this because this would just open the floodgates for people, for real estate. And you guys, this might be obvious to you or maybe not. But the reason that the financial services industry does not want you to use your 401k for housing, guess why? They don't get a commission for it.
Mm-hmm.
That's why. If you have to funnel it into mutual funds or stocks or with them, then they can make fees. But if you have the freedom to do whatever it is that you want with your money, then all of a sudden it takes away cash out of their pocket. So I would love this. This is one that obviously I think everyone should support because just look around, guys. We are super unique. And I didn't realize this until I started flying around with Kiyosaki back in the day. And we would go to these other countries and people would put away money in their retirement plans and they would go out and do investments. They would buy homes for their kids and all this other stuff, but we can't in the US. So this is a big one.
Yeah, think about how much that would open it up. Think about you, yourself, or people you know, how much money they have in their 401k. For a lot of people, it's a lot of money. They could easily put down a down payment on a house and, like Ken said, get an investment going, have their kids live in it. You know, typically you can't buy something that you're going to live in with that money, but it would still really move the housing market because it would allow a lot of people, even people that are paycheck to paycheck, but they have been putting money in a 401k for 20 years to be able to, you know, afford some kind of real estate.
Right. And there is a hack right now that some of you might know about. It's called the self-directed IRA. Just look into it. There is a way to move money from a wealth manager into a self-directed IRA right now. And I'm not advocating you do this. We don't have any affiliation to this. I'm not going to promote any company around this. But the reality is you can do that. And then you can self-direct into what you want. But even then, you have to invest with people like me, and then it works. But which is ridiculous because you should be able to do whatever you want with your money.
Right, you can't go buy like a single family home with it.
Like I couldn't buy my kids a home with it right now if I wanted. I couldn't buy my mom a home, even though I've done that. So those are things that you could now do. And so I'm a huge fan of this, and I hope it passes.
Yeah, that one could really move the needle. Something else is getting rid of capital gains on a primary residence.
This is a big one. So it's huge.
Well, so a lot of people listening, you know, as you know, there are exemptions, right? There's $250,000 per person. If people are married, that's $500,000. But for a lot of these seniors, and this is one of their bigger issues for downsizing, is that their houses went up more than $500,000, right? Since the time they bought it.
My mom's a great example.
Right. Well, your mom's a great example because she's single now, so she'd only get a $250,000 exemption, and her houses went up much more.
Right. My dad passed away for those of you may or may not know. So my mom is now widow, but she's got like $700,000 in upside, right? So the issue is we sell that. She's got the 250 exemption, and then she's got this cap gain over that top of that. So call it $400,000 or $500,000 of tax, which the government would take a huge piece. And so what we did is we rented it instead, which pays for what she's doing now. And she's got this monthly income coming in. So it's really working for her. But most people want that money, right? And so
yeah,
that's what's called a step up in basis. But who wants to wait? That's ridiculous. That means that my mom has to pass away, which I hate even discussing. But that's the way it's set up. And then that house can transfer to the next generation. That also could go away at some point, but that's the way it is at the moment. But the reality is my mom should be able to have access to that money when she wants it. And that's what this is all about. And also, let's don't forget this run up we just had. Let's call it
Right.
from 2020, 2021. There's a lot of people sitting on a lot of equity here. And so this would be a game changer for a lot of people. I like this one.
Well, it opens up the housing market, right? Because if somebody is sitting on $1 million appreciation or somebody's sitting on
Which is a lot.
$500,000 appreciation, right? They actually want to downsize. They want to get rid of that house, but they can't because they don't want to pay the tax. So if you make them not have to pay the tax and then those houses come onto the market, that's good for those buyers that want to buy those homes, right? And they don't have to be an expensive home. I mean, Ken's mom bought her home for $10,000. It's now worth $700,000. So it's not like these are homes that you have 700,000 appreciation because the home is $2 million. Like, no, these are homes that, they're not cheap, but they're homes that are, quote unquote starter homes.
And I'll just throw one other thing in here. Like Danille's in this category. She doesn't like debt. My mom doesn't like debt. All right. I talk a lot about debt, and you guys know I'm a fan of it. Now, I'm not a fan of being heavy and leveraged against myself, but this actually penalizes the people that are paying out their loans, right? There's a lot of people in this country that don't have any debt at all, and you know what? They're the best risk on the planet. They have, right?
Yeah.
These are people that don't have a lot of monthly debt, yet they're getting penalized under this system, and they should be able to have access to the equity that they have in their home if they need it. So I like this as well.
So number 6 is interesting. So it's buy a home with 1% down. So that this kind of opens those floodgates to people to not have a lot of money invested in their house. We saw this kind of in 2008. The other thing about it now is that the payments would be so expensive for most houses if you only put 1% down. You would have private mortgage insurance on top of that. You'd have just as
Let's explain
expensive.
what that is.
Okay.
If you have more than 80% leverage, which in this case 1% down means that you're at 99% leverage, it's called PMI, private mortgage insurance. It's like an insurance policy on top of your regular mortgage.
Because you're more likely to default.
Correct. So I love this from a marketing angle.
Yeah.
Right? Like 1% down, 1% down. Like, people don't look at the other side of it. However, this could work. They could bump out the term. They could go from 30-year to 40 year.
We'll talk about that. Yeah.
Yeah. I mean, but I'm saying that if they combine some of these things also, so there's only 2 ways for this to work. The first way is the rates have to be low. So maybe if there's something that could be done for a first-time home buyer, 1%. I like this idea, but the issue is going to be default.
Yeah.
Right. And so you could extend the term. There's other ways around that, but the 1%, if this did pass, and you could buy a home with 1%, and they could figure out the rest without the default piece as a safety net for people. I would be a huge fan of this.
Would you?
I would. Yeah. If again,
because I feel like this is like that 2008 where everyone gets a house.
It absolutely could be. Don't get me wrong. I 100% think that this could be something that could be bad, but I like the way this is started. And everyone should not own a home, but there's millions and millions and millions and millions of people that would be completely good on this program, right? But there could be a lot of people that aren't, right? And it's gonna boil down to, can they pay that mortgage? And so Danille's right. It's going to be expensive. 1% also means 99% financed. That's what that means, right? And so you're going to have to find people that are comfortable with the other side of that.
Right. Well, and then the last thing that Trump wants to do, and we've heard this floated on both sides of the aisle, and I think this one has the most viability, but it would be best in the short term, maybe worst in the long term, but that's kicking the 30-year mortgage to a 40-year mortgage.
Yeah, 35, 40, even more. So you guys saw this right before your eyes. You saw this in the auto industry, right? People solve to their monthly payment. So I've watched this. I just shake my head, but car payments have always been kind of ranging in a certain, let's call it $500 to $1,000. Now, granted, I'm talking about new cars, But how have they done that? They've done that by going from 36 months to 48 months to 60 months to 72 months to 84 months. All they've really done is they've extended this out. So they keep you in debt longer. So said in another way, they've kind of moved it down the line, just like a 30-year mortgage, right? Now, I know we're not talking about 30 years for a car here, but that's how they've kept the payment low. They've kept you in debt longer over a long period of time. It's enabled you to, that you create the lease program and all these things that the car dealers have done to try to keep you in debt and keep you as a customer. So by lowering the monthly here, it helps a lot. Like, think about it. If you add 10 years to anything, it's going to lower your payment.
Well, and this is what it does, right? It lowers the payment in the short term. In the long term, it will probably make housing prices go up because this is what it does, right? Like, the reason college is so expensive is because everyone can get a student loan. If people couldn't get a student loan, college would be a lot cheaper. Same thing with our mortgage rates, right? If we only had a 15-year loan, people would be able to afford as much house, so prices would have to come down. We now have a 30. If they move it to a 40, that's just going to push prices even higher. But in that short term, which is what most presidents care about, it's like the immediate result, more people could buy a house because you could then take $500 a month off your payment. That affects a lot for a lot of people. Then they can also all of a sudden afford that extra $100,000 on their house and they could buy.
Right. And it might surprise you guys that on the apartment multifamily side, we already have 40-year mortgages, right? Through HUD. And as I mentioned before, Kennedy actually created the HUD program. This is the Housing of Urban Development. There's a program called the 221D4 program, which is something that Ross and I have done over the years. We built plenty of projects, and we have one going right now, where this is a construction to perm 40-year amortization. So what that does is allows new construction for us, lowers our monthly mortgage payment. I know it's very different, but the point is these are already things that the government's doing, and that's important. So it's just happening at the commercial level, and it's been in place for years. And so this could easily get pushed down to the, call it the private consumer.
Yeah, and you already have this in Europe, right? In the United Kingdom, they have 40-year mortgages. In other countries in Europe, they have 50 to 60-year mortgages.
Yeah.
And it doesn't mean that the rate is set on those, but they are.
Yeah.
And people will argue, okay, if I'm going to do a 40, 50-year mortgage, am I basically just a lifelong renter then, right? Because I'm going to constantly have this payment. And the truth is, yes, but
you're just paying, but you're paying down your home.
Yeah, you're paying
like that's the difference.
Yeah,
you're right. As a renter, you're paying somebody else. In this case, you're paying down your home. So it's just happening over a longer period of time.
But also, too, you have to think is when everyone can buy a home, what is that going to do to home prices, right? Like, what did it do leading up to the 2008 crash, right? There was a huge run up on housing prices over that decade, right? Because more people could buy a home. So if Trump or whoever is in power wants more people to be able to buy a home, which is a great campaigning tool, that is going to bump up home prices because we don't have a lack of demand right now. We have a lack of people that can afford to buy the homes at the price and the rate that they are.
Right.
So if we start to move that barrier, then you're going to have a lot of more home sales. Thanks, guys. See you next week.
See ya.